Yes, this is moving on to oil and gas, fossil fuel investments. You've got 1%, I believe, of the pension fund's assets held directly by companies that extract gas and oil. Is it not the case that with these values seeming to be set to fall, that you're actually risking exposure of the assets by, even though it's comparatively small over the overall portfolio, it's still significant sums financially, and are you not risking exposure?
So when we look at any investment that we make, then obviously the key determinant to us whether we choose to make the investment or not make the investment is balancing the risk and return expectation from it. And so certainly when we are analysing a company that may be involved in kind of fossil fuel extraction, then of course we would naturally look at the extent to which they have reserves that can be extracted, the price at which it's going to cost them to get them out of the ground, and the extent to which there may be a market for those. The vast majority of that exposure you mentioned, so around 0.9 of it, comes from our passive equity exposure. So earlier on I talked about, in some cases we choose just to track an asset class. And when we do that, we buy futures. So the best example might be if we want to have exposure to the UK equity market, we can individually go out and buy companies or stocks, or we could buy the FTSE, so the whole stock market. And the reason that we do that on a passive basis is it's very cheap, it's very liquid, and these global indices have a proportion of them with companies such as Shell and BP, etc. in them. So the large majority of our direct exposure to fossil fuel extraction is as a consequence of those index investments. What we could do is consider investing into an index that doesn't include those companies. But one of the reasons we invest in indexes in the first place is because of their liquidity and our ability to move in and out. There isn't a very well developed market in fossil fuel free indices. So therefore at the moment, whilst it's something we'll continue to monitor, we don't feel that's a good choice to make. And so what we have made a decision, if you go back to what I talked about in our internal equity portfolio, we don't invest in any oil extractors in that portfolio today because our assessment of the balance of risk and reward against the other companies that we can invest in has resulted in us not investing in those fossil fuel extractors.
So it's just the ones that are part of the index.
There's a small part which is, we also invest with some external managers, and they have a mandate, and there's a very small part of that comes from those external managers investing on our behalf. There
appears, though, to be a momentum growing in terms of a number of large institutions and pension funds and so on worldwide now divesting from fossil fuels. The research we've been given here puts it at 2.6 trillion either moved from or planned to move from fossil fuels. And this appears to be gaining momentum. Is this not something that you should keep a close eye on and consider very, very carefully at the board?
We do keep a very close eye on it. I mean, one of the things that I believe in your briefing packs is that we've recently formed a stewardship committee within the LPFA. That's a committee that I chair. It's a committee that various members of the organisation sit on, and that's very much because our belief is that we are here to be good stewards of the investments that we make. And so we're engaging with companies that we invest in. We're obviously doing our desk-based analysis as well in terms of what the risks and the potential rewards are. So it is something we keep a very close eye on, and we'll continue to keep a close eye on.
And I don't sit on that committee myself, but I believe the Assembly's Economy Committee made some recommendations around this very issue for the Pensions Fund Authority. Have those been considered and discussed at board level?
We had this September we had a discussion around this.
What was the outcome? What was the outcome of those?
So to reconfirm our existing stance on this, which is that we are a responsible investor. We believe that the best way of deploying that is through our stewardship activities, and that our first and foremost kind of priority is to deliver on the returns in a risk-managed way that we need to pay pensions. And so from that perspective, we continue to engage in that way in our underlying investments. I believe we have, in Sir Merrick's response after appointment, there was some comments on that, and that's exactly the position that we maintain.
Okay, thank you, Chair.